There's a lot of noise lately about SPACs, and we're hearing them all over the CNBC. SPACs are the new IPO, but what exactly is a SPAC? Well, a SPAC stands for a special purpose acquisition company. The whole reason that SPACs exist is because IPOs are really painful for a real company anyway. If you're a real company, you have revenues and financial statements, and to go public, you have to go through this big song and dance. It takes, a year. You have to be all this stuff in public. You have quiet periods. You have all kinds of stuff to worry about. It's just a pain. But IPOs are super easy if you have a shell company. Shell companies have no revenue, no financials to speak of. They make $150, expenses or something like that, and that's it. So it's really easy for these IPOs to go public. So how does it work? So what happens is you have a sponsor who is basically just a person. Usually these are wealthy investors, and those sponsors to get together and say, we want to form a SPAC. So they start a company called a SPAC, and then they go through the process to IPO that shell company, again, that has basically no assets, no real business, no revenue. And they IPO that company, and then they go and solicit investors. So people from the general stock market or the friends or whoever, investors pile in to put money into this SPAC. And the purpose of this now public company is to go acquire another company. Usually in their bylaws and whatnot, they have a time period, typically 2 years, to go and buy a company. Sometimes it binds them to buy companies in a certain sector, a certain type of company, and they go out there and they search for the company to buy. So all these investors who bought in here didn't actually know what company they were going to end up buying into. So finally, they identify the company that they want to merge with. They negotiate an acquisition or a merger, and the shareholders of the SPAC have to approve it. And once they do, the assets of the company that they are merging become essentially the SPAC. It merges into the SPAC, and then they will change their name to match that company. And then suddenly, without the pain of an IPO, the company that merged into the SPAC is now public. And that is how it works.